to Thursday Night Stock Charts Live. This is Bob Desmond of The Contrarian Trader. Welcome aboard. For those that got alerted by email of the live stream, I apologize for getting it out late tonight. But what we're going to go over tonight is what we normally do. We're going to talk about the weekly charts. How are we poised to close out the week? Am I as bearish as I was? And we'll talk about the valuation of the market. We'll talk about economic data. We'll talk about the whys behind why I believe that we are now going to see a rally in equities. We'll talk about a little bit conspiracy theorist type stuff, but stuff that we should be aware of nonetheless, because it doesn't get spoken about. You have the real truth and the official truth, the narrative, and we're going to talk a little bit about the real truth or the potential real truth that's out there in this market and what's going on, especially over in Europe. How could it impact the dollar, and how what's happened over in the Ukraine could really adversely impact the United States and its global standing as the world's reserve currency, or the view of the United States as being the for those of you that are old enough to remember, the Mike Tyson of 1988, invincible in terms of economic power. So we'll talk about that in a moment, and how, in a lot of ways, what we're experiencing, whether it be COVID, whether it be the debt that we put ourselves in, well, way before COVID, you can't blame Biden for that. But he certainly didn't help. He hurt. It's all self-inflicted. And I try to hammer this home is that, pretty much whatever we experience, whether it be the great financial crisis, whether it be the dot-com crisis, whether it be COVID, all man-made, everything self-inflicted. So we'll talk about how we continue to inflict damage on this economy and on the global economy, and how that may impact your investments in the coming months. But don't forget, we have a midterm election. I'll probably say that a few times between now and the end of the show, but we do have midterms coming up, and I sense some chicanery afoot. So what else are we going to go over? We're going to go over some chart requests, but let's begin with saying hello as people come in. We'll let them come in before we get going. Talon. Hey, yo, Babo, let's go. You got it. Oh, if you're looking at my glasses, some of you, many of you are very astute out there. And you're looking at my glasses and you're saying, man, I remember those glasses. Those are the glasses that your puppy dog chewed apart a number of months ago. Why are you wearing them again? Because I lost my other pair and I'm waiting for a new set to get built. And the guy, I asked him to fix these as best as he could. There was no pad here. It was eaten into the side of my nose. He did the best he could, but there are teeth marks in the lenses. So if you're looking at the glasses saying they look crooked, you're right. If you're looking at the glasses saying they look dirty, you're kind of wrong there, because those are teeth marks. Give a guy a break. All right, let's say hello to Lewis. Hello, Lewis. All right, let's do this. All right, let's talk about the Shiller PE ratio. Where are we at? We continue to decline this week, 29.32. This could be the second consecutive week where we close out the week with a 20 handle on the Shiller PE ratio. The first time in a long, long time we've been able to say that. So bullish. Economic data. Not much in terms of economic data this week. I mean, with the abbreviated week, not much happened. You had Powell up on Capitol Hill. Today, you had initial jobless claims, again, rising. And I predict that this number is going to continue to rise. And as I always like to say, as sick and perverse as Wall Street is, it's good news for stocks. Bad news is good news. I didn't make it up. It was like that when I got here. Right? Bad news is good news. Why? It puts pressure on the Federal Reserve not to raise rates either not to raise rates, either to not raise rates as aggressively or to cut rates. We're going to talk about that more in a moment. The current account deficit, only $291 billion worth of a deficit. Psst, psst, we're bankrupt. We're bankrupt. That's real talk. Officially, that's not the narrative. We're the wealthiest country on the face of the earth in credit. S&P 500 global U.S. manufacturing PMI, big miss. Big miss. Global U.S. services PMI, big miss. So economic data continues to deteriorate. Do we have anything coming out tomorrow? I don't think. Oh, we have Michigan survey. I think Talon, you posted that, or somebody posted that in the members area today. That was coming out. So thank you. 5-year inflation expectations coming out. So let's talk a little bit about a rally. Trader Isaac. Hello, Bob. Can LEBU close above 8 tomorrow? Nice one, buddy. Thank you. Could it? Anything's possible. You have the 50-day moving average, which is immediately above. Usually the first run at the 50-day moving average gets rejected. So I kind of doubt it, but you never know. With it's LABU. I mean, I never, ever want to underestimate LABU. That's why I usually don't sell naked calls on LABU. So anything could happen. Okay, why might we rally? Yield curve. The yield curve is very close to inversion. What does that mean? Recession. If history is any guide, the inversion of the yield curve is recessionary. Does that mean you sell stocks? No, you do not. Why? Why might that be? It's because the pressure is going to be on the Federal Reserve, not just to raise rates, but to cut rates. That is stock market bullish. Do I see that happening in the next couple of quarters? Probably not. Why else might we rally? You take a look at the Bulls versus Bears index. The last time I spoke about this on a live stream was back here in April. And I said, expect a rally. We are at all-time lows. Sure enough, we rallied about 10%. Where are we now? Right in the vicinity. Could we break down to new lower lows? Anything's possible in this economy, but I don't think it's going to happen because the way the weekly charts are setting up, granted one trading day left to go, it looks as though we're probably going to see more higher highs. And don't forget, we'll talk about this later on when we talk about TrendSpider. TrendSpider is our favorite charting software, and it is our sponsor. Link below, 35% discount code. I digress. We're going to talk about seasonality. Seasonality, the month of July, August, very favorable for equities. The days of sell in May and go away, they're over. That's not been the case for a long time. So July, August, usually pretty good. People could trade from their Hamptons house, right? They don't need to be in New York City. Nobody wants to be in New York City. Danny, hey, brother. All right, the VIX. So a couple of takeaways here. One, the VIX is the exact reason why I do not believe that this bear market is over. We have not had capitulation. I've said this once, I've said it twice, I've said it 3 times. I'm going to keep saying it. While we may get a bear market rally, that does not mean that this bear market is over by any stretch of the imagination. There has been no major bear market or no major correction in the past 20 years that has not seen the VIX shoot through the 45 mark. And of late, we've seen the 80s, the 90s on the VIX. If you go back to COVID, you go back to the financial crisis. So is this ruthless bear market over? I think not. But we can still rally. Why else might we rally? Well, The committee of bankers that we have over at the Federal Reserve, well, they laid out a very strategic game plan back in November. And what they were going to do is they've changed it a couple of times, but what they were going to do is effective June 1st, they were going to get serious. They were going to get serious about reducing the size of their balance sheet. They were serious. They're going to jack up rates. They're going to fight inflation. They were so serious about jacking up rates that they waited a month. And then they only went a quarter percentage point. And then most recently, when they realized, or they finally had to fess up, inflation's not transitory, they went up 3/4 of a basis point. How's the Federal Reserve's balance sheet doing since June the 1st when they committed to reducing earnest monies off of their balance sheet? Certainly, the esteemed, the venerable committee members kept their word. Of course they would. The chairman of the Federal Reserve certainly would. He was not nominated by, he was nominated by the president, but certified, ratified by the Senate of the United States. These United States, certainly they would never make a mistake. How's the Fed's balance sheet? Well, let's go back to June the 1st. Right here. The Fed's balance sheet on June the 1st, when they were supposed to start running off their balance sheet, well, that Wednesday, this goes from Wednesday to Wednesday, reported on Thursday after the market closed. That Wednesday, their Fed balance sheet rose. And you got to say, okay, it's early in the month. It's only the first day of the month. Let's not be too critical and too literal of the Federal Reserve. Let's give them some time. Maybe they'll do it next week. Okay. We go forward to the 8th. Oh, Jesus Christ. It rose. The Fed's balance sheet rose. They're taking on more debt, not reducing it, because that would jack up interest rates. So, all right. Desmond, you're being too rough on the venerable Jay Powell. Certainly, he's going to keep his word because he's aware that inflation is on a tear, that he must reduce the size of the Fed's balance sheet to protect the middle class and the underclass. Okay, let's go to the next week. Whoa, it rose again. Okay. Time's running out. Certainly by the end of this week, ending yesterday, reported today, the Federal Reserve had to at least reduce the Fed's balance sheet by a single dollar. No, it rose. A couple of $1 billion, but it rose. They were supposed to roll off their balance sheet by, I believe, $35 billion this month, 10 of which was mortgage-backed securities, 25 of which was supposed to be treasuries, give or take $1 billion. Give me some room. Fact check me here. But that's what was supposed to happen. Those numbers in the ballpark. It's clearly not going to happen. And if it does happen in one shot, you're going to see interest rates spike through the roof next week. It's not going to happen. So, you got to say, you got to ask yourself, you know, and this all goes back to this self-inflicted damage that the government does to us. They saw inflation coming down the pike. They knew it. They printed up $5 trillion and told people to stay home, don't produce, just spend. They knew it. They knew it. They wiped out small businesses. They sent all those profits up to major corporations. The biggest companies got bigger. The smaller companies got whacked. Self-inflicted. So here we are. We're in the tsunami of inflation. They have the tools at their disposal to reduce inflation. The problem is they can't. They can't. That's the dirty little secret. If you go back to my TrendSpider presentation, it's on their website, or on their YouTube channel, TrendSpider.com. I said back in February that they were not going to be able to raise rates as aggressively as they said, and they're not going to be able to reduce the size of their balance sheet. Why? It's because if they do, if they normalize interest rates, it would be the equivalent of the defense budget on the repayment of the interest only on our debt. Forget about the principal. They need to do this, what they're doing, meaning they need inflation to inflate away the debt. Underclass, lower class, whatever you want to call them, middle class, sorry, you're roadkill. You're roadkill. You don't matter. I don't matter. We are roadkill. So get that garden started, because things are going to get hairy, because the markets are now beginning to price in. And I've been talking about this with members quite a bit, that, you know, we have positions in gold stocks and we've stuck with it because I've been saying that, you know, people aren't paying attention. The street's not paying attention to the fact that oil is peaked, food prices have peaked, and they've only come in more this week. So what is the Federal Reserve done? They have successfully provided us some, at least short-term, demand destruction. But with that also comes jobs. You're seeing layoffs rise. You're seeing people become more and more unemployed. I can't wait to see next month's non-farm payrolls. That's going to be a real rocket ship for the stock market, because if they see non-farm payrolls drop like a rock, oh, you're going to see stocks go like this. Because what does that mean? It means the Federal Reserve is going to raise rates into a massive recession. And by doing so, they're going to kill business and they have to lay off more people. But the flip side is that if they don't raise rates, they have to hope. And hope is not a strategy, that inflation comes down to where it was pre-COVID. It ain't going to happen. So rate expectations are dropping like a rock now. This I predicted. And subsequent rate cuts, they flatline for the most part. Choppy action at best. Taking a look at the PMIs, smashes to 2-year lows. This is the Purchasing Managers Index. And when you take a look at this number, the reason why the number here, in particular the services number, is so important is because the way you read the PMI is this. It's like the 50 is the neutral level, right? So if you're above 50, that's a sign of economic expansion. If you're below 50, that's contraction. Now, today, the services index, they expected 53.3. They got actual 51.6. Manufacturing dropped from 57 to 52.4. We are on the verge of a contraction in both PMI, manufacturing, and services. And I wouldn't be a bit surprised if we are in recession right here, right now, and you have these Wall Street thugs talking about 2023 recession. I don't think so. We already have Q1 GDP negative. All you needed 2 back-to-back quarters of recession, and the Atlanta Federal Reserve has already dropped down the growth forecast for Q2 to 0. So a recession is technically a rounding error to the downside. So PMIs in the Eurozone. Here's where it gets a little bit more global. And this is one of the reasons why I think that the price of gold dropped today in dollar terms, not euro terms, but in dollar terms, because as bad as we are here right now, the Eurozone is a lot worse due to the fact that, A, they don't have an elected government. Let's face it. The EU is a governing body, right? They're appointees. As long as they do their lackey jobs, they're good. They're happy. They don't care about anybody in the country that support. I don't even think do they represent. I don't think so. So the Eurozone is a basket case due to the fact that it goes back to, again, self-inflicted. They had to know if Russia invaded Ukraine that they would have to have a sanctions regime against the Russians. But all they needed to do was tell, hey, Zelensky, you little punk, you're not joining NATO. You're going to say it publicly because I don't want the energy from Russia, the food from Ukraine to stop coming into the Eurozone. We don't want more inflation than what we already have. They didn't do it. Putin been warning for years now. Better not join NATO. Stop putting troops on our border. We, in 1963, threatened to go to nuclear war with Russia because they wanted to put missiles in Cuba 90 miles off of our coast. What's the difference? So, I have to caveat this. I feel horrible for the Ukrainian people. My developers are Ukrainian. Love them. Great people. The government, screw them. All right, so this is Austin Fitts. Honestly, I'm not that familiar with Austin Fitts. I'm going to share this. You listen to it at your own leisure. Certainly don't, I just actually screwed this up. There we go. You certainly don't want to turn me off. As a matter of fact, smash the like button, please. Please, I beg of you. Listen to that at your leisure. I don't agree with all of it, but I agree with the headline and I agree with the narrative. It's not a downturn. It's not a turn down. It's a takedown. And I've highlighted the summary here. High food prices and high food and fuel prices, along with crushing interest rates, are no accident. All Zelensky had to do was say, we are neutral. We control him. Didn't do it. Therefore, it was intentional. To me, this is part of the going direct reset. Let me tell you the problem is doing things that create value on assets requires the rule of law. I want to show you a chart in a moment. We are watching a significant financial coup d'etat, no doubt. We have talked about this for years. The financial coup d'etat is turning into a coup, 2,000 mules. And we are seeing a fundamental breakdown of law and order in many places. Can that be argued? It is related to people trying to pick up assets. We see cities where crime is off the charts and speculators are having a field day picking up assets with that $5 trillion. Her argument here is that what has happened is that the government, our representatives, printed up $5 trillion and that money found its way to those who will play ball. They take prime real estate, New York, San Francisco, Los Angeles, Chicago. They turn it into a cesspool. A cesspool. I will not go to LA or San Francisco. I don't have much use for Chicago, except for my TrendSpider friends there. And New York, I just don't go to anymore. I just don't do it because it's dangerous. There's no rule of law. The however is that the bargains that are going to be had in these areas are going to be astounding. So that's the argument, is that it's a massive real estate play in these big cities. And once they decide, okay, we have our friends, our crony friends in positions of owning prime real estate, now it's time to clean things up and raise those values. That $5 trillion for the individuals and the corporations now turns into what? 100 trillion? Think about it. So why are our Why are our gas prices and oil prices so high here in the United States, besides the fact we have a potato for a president who shut down the leases offshore and onshore on federal lands? Well, we're now, because of Ukraine again, because Ukraine is shut down and they have the Eurozone has sanctions on the Russians. Well, who has to supply them, meaning the Europeans, with their energy? We do. Who just sent $40 billion worth of aid over to the Ukraine? We did. Who has to subsidize now the cost of energy to be shipped over to the EU because they wouldn't tell the Zelensky, you are neutral, whether you like it or not. You're not joining NATO. We do. This is the great fleecing of America. If you don't think we're at war right now with our own representatives, you're wrong. We are at war. It's not kinetic. Sometimes it is kinetic. But usually it's silent. Very, very silent, but very, very deadly. Initial jobless claims. 5-month highs as layoffs accelerate. Now, this goes to the point of where you have lawlessness, right? So where do we have the most layoffs, initial jobless claims? Is it any shock? Michigan, Connecticut, Puerto Rico, Indiana, New Jersey, Massachusetts, all the Northeast, the Rust Belt states. Where's New York? Where am I on here? I'm not that horrible. Who's doing well? The South. Actually, Illinois, surprising. Illinois is doing well. Florida doing well. Georgia doing well. South Carolina, Mississippi. The South, primarily. Illinois is doing well. All the rural areas, fleeing the cities, going to the rural areas, and where you have the rule of law. Fed rate hikes. Oh. Did I just lose everybody? Did I just lose everybody? No, I don't think I did. Could somebody tell me if you could still hear me, please? I just had a surge here. Second one today. Thank you. Will, appreciate it. Thanks, Larry. Trader Isaac, thank you. Lewis, no? I think Lewis is messing with me. Rick Roofing, thank you. All right. Fed rate hikes to end this year, followed by 3% rate cut and QE. We've been saying this for a long, long time. They're going to have to go back to QE. The only way to keep this all from imploding, QE. It's going to happen. Why? This. Biden economic advisor. Can you believe this? Biden economic advisor asserts that government spending will solve inflation crisis. Yeah, if you cut it. If you're going to tell me that you're going to cut spending, okay, I'll buy that. I'm good with that. Okay, good. Oh, you're going to issue debit cards? You're going to have a tax holiday on gas prices? I don't think so. You're encouraging more usage, and you're not increasing supply. It's a no-brainer. But what they think they need to do is they need to print more money. They need to print more money, and that's going to solve it. This is this Keynesian Marxist mentality that these people have. These are supposed to be intelligent people, and they are, but they are nefarious bastards. Pardon me, family-friendly show. I apologize if you watch this on your Kindle aloud or on your TV. My apologies. These are nefarious demon people, lizard people. I didn't go through this yet. I can't go through it. More about where we're at, we went into, and this is all predetermined. We were telling the Ukrainians, listen, you're going to have Russian tanks rolling over your border in a couple of weeks. We knew about it. We could have said, Zelensky, listen, you got to stand up now. You're neutral. We don't want this problem. This is a problem. This could lead to World War III. We had the ability. Again, self-inflicted wounds. But one thing that we did, and I'm confident in this, one thing we did not anticipate was the Russians were ready. They were ready for this. I knew it. I knew it because I've been watching the trades, the gold trades, for years now. The Russians, the Chinese have been loading up on gold. They are able to back their currencies with commodities. The Russians will not accept any other payment for their energy besides the ruble. So where's the ruble now? Well, here's where it was, where the invasion occurred. Here's where it is now, multi-year highs. Highs not seen since 2015. Somebody want to tell me who won this war? Because it's almost over. Because it certainly is not Germany. Germany elevates risk level at its national gas emergency plan to second highest alarm. You can't make this up. They knew this was coming. It's self-inflicted. We must not fool ourselves. The cut in gas supplies is an economic attack on us by Putin. Can you believe this? It is obviously Putin's strategy to create insecurity, drive up prices, and divide us as a society. This is what we are fighting against, he continued. Pre-invasion, hey, Zelensky, U.S. ambassador from Washington, D.C. here. Listen, from the United States president, you're going to be neutral. You're going to announce it today or else we cut off all aid. Okay, you got it. Yep, we're good. This all could have been avoided. But we can't take the thumb in the eye in the fact that we're losing. So what are we going to do? We're going to ratchet it up. NATO chief calls for Sweden and Switzerland to join as quickly as possible. Geopolitical risk. Ukraine war blows up EU superpower delusion. Absolutely outstanding headline. The EU's largest member states, France and Germany, have sought to appease Putin because they know they need Putin. At the expense of Ukrainian sovereignty, they're stepping back from Zelensky. Meanwhile, German Prime Minister Olaf Scholz, for reasons that remain unclear, has stubbornly refused. Remain unclear. I guess he didn't read Zero Hedge. Germany elevates risk level in its national gas emergency plan. Back to Olaf Scholz. For reasons that remain unclear, and stubbornly refused to supply Ukraine with weapons it needs to defend itself against the Russian aggressors. Oh, my Christ. These are the leadership in the EU and in the United States. Folks, there are no words. There are no words to... This has to be intentional. This is an intentional fleecing of the middle class. It has to be, because this is too stupid to be stupid. And when in doubt, when you can't fight inflation anymore, what do? You cap prices. There's been no time in recorded history where the capping of a price has ever worked. Ever. All you do is, you got a fixed price, but what do? You reduce production. If a company can't produce something at a profit because there's a cap on it, well, what are you going to do? Well, first you're going to get more efficient. You're going to lay off people, so you have more unemployed, and then all of a sudden you're like, Jesus Christ, I can't make a buck here. You know what? I'm going to cap my wells until the next boom in the economy. So this is where we're at, folks. This is the way I'm seeing the world. Uh, leave a comment, man. Leave a comment. If you disagree, agree. We're running out of time. I want to get to chart requests. Let's do a quick roll through some comments. Get some emergency rations and fishing rods. Yes, fishing rods are, that's code. That is, how do I put this? Salty Army code for, I don't know, uh, lizard peeps. Yep. They are lizard people. Countdown to November 8th. 100. Awesome. Larry on the job. Okay. Russia is now with the, yeah. So what, Swift? Big deal. Visa and MasterCard, even before the invasion, were no longer the biggest credit card processors in Russia. It was a Chinese company. Let's do some weekly charts. Okay, as we go through these, for folks just joining in, not familiar with what we do here, we're going to take a look at the weekly charts because this sets us up for how we want to prepare ourselves for next week and how we want to be positioned. So what I do like to say is that it's only Thursday. And you may be saying, only Thursday? What are you talking about? We have Friday to go here. A lot can happen on a Friday. All right. So one trading day left to go. Take everything I say here with a grain of salt. Be open-minded. What looks horrible today may look great tomorrow at the end of business. What looks great today may look horrible by the end of business tomorrow. Every single week, there's at least one example that I could throw out there on Saturday when I go over the weekend commentary with members, because we review these again, but after the markets are closed, and then we make our decisions about what we want to do. Are we bullish or bearish? All right, 10-year yield. So we attempted a breakout last week, and there was a rejection. We have pulled back this week over 5.25%. That is stock market bullish. It didn't get bullish until today, but it's stock market bullish. We've been down all week. As for bonds, strong week, the first really strong week in quite a while. They're up over 1.75%. Take note of the RSI, higher lows. I think we're breaking out, assuming that we close strong on the TLT. We do have resistance at 115. Members, we may open up a strangle here. That's an options cash flow strategy, meaning we're going to sell premium, both a put and a call, probably going out like 45 days, something like that, and take advantage of this situation. And I might even just sell a naked put. Not sure yet, but we're already thinking about 45 days out with our options cash flow strategies. The tips, weekly chart, we're up over a 0.5 percentage point. Possible higher low here on Stokes. Good stuff. Volume light. We're closed Monday. Let's keep that in mind. We still have tomorrow to go. So let's give a little bit of slack here for volume on a Thursday night. The dollar. All right, so this is what kind of hurt this week. And I don't know why, to be honest with you. I think that all the news that's been released today and this week is gold and gold stock bullish, except it wasn't, unless it was a washout today on the gold stocks. It quite very well be. I'll go over GDXJ, maybe NUGT in a moment to show you where we bounced today. So the dollar is technically down on the week, yet gold down, gold stocks down, silver stocks down. Is it due to commodities coming in? Maybe, but all commodities are not made equal. Remember, gold has taken it on the chin because the narrative, the sentiment by the market is that the Federal Reserve is going to raise rates. But remember that chart I just showed you, the expectation of rate hikes is dropping. So if that's the case, and the expectation of rising yields was keeping the dollar up, well, if expectations are dropping, What's keeping the dollar up? And God forbid, you see peace in the Ukraine, the Russians carve out that eastern piece, the Donbass region. I forget what the other names are. They claim that or make them republics. And they say, you know what, we're going home now. We're good. That's probably the worst thing that could happen to the US dollar. The last thing that they want to see is that happening. So you want to see a weak US dollar? Watch Russian tanks go over the Russian border and go home. That will crush the US dollar because everybody's going to remember how the United States treated the seventh largest, I think they're the seventh largest economy up there, in there. Not a massive economy, equivalent to Italy. We seized their Forex reserves. We weaponized the SWIFT system, which is a dollar-based payment system. We weaponized it. It will never be forgotten. The dollar goes like this. And God forbid the ECB ever finds the balls to raise rates. We kind of already, the dollar is going to drop like a rock. The VIX, we spoke about this already. We haven't seen a blow off top. I believe we're going to rally. It's not the top. It's not the bottom yet. Now, one caveat that I want to point out is that what happened today was a bit of a divergence. And you've seen this quite frequently lately. I almost think that the VIX is manipulated because you take a look at today's price action. Closed up. Okay. So what? The VIX closed up. Well, so did the S&P 500. And it's usually not supposed to happen. You've been seeing a lot of that lately where the VIX is not functioning as it's intended. So somebody was in there today. I'll put some brackets around it of how I interpret it. While the equity market rallied today, you had VIX buyers buying insurance because they're not complete believers. Now you could say, well, that's a bullish thing because now the market's going to climb a wall of worry, and that's the beginning of a bull market. Maybe, but we haven't had a blow off top yet, so I'm not done with the old bear market. So moving on to equities. Dow Transports, weekly view. No new weekly lower low. We've held support. We are up on the week by over 1.25%. Good stuff. Do we close there? Daily chart. Looking good. Double bottom setup. Bullish key reversal bar. Bullish key reversal bar, one of my top 5 favorite candlestick patterns. 5-part video tutorial below. Free of my top 5 favorite candlestick patterns. Take advantage of it. So transports looking good. Dow Jones Industrial Average weekly chart up. And at current, we are above resistance at the 30,500 mark. We close above that mark. You're seeing higher highs next week. Stokes is still weak. RSI, possible higher low. Tip your cap to the Dow Jones weekly chart. Looking good. How's our volume? Volume light. Close Monday. Still have tomorrow. But it's still probably going to roll in pretty light. Daily chart. Bullish reversal bar on the day. We're at resistance. I'd like to see a pullback and a higher low here to act as a proper launching pad on a daily time frame. Spiders. Higher low. RSI. Weekly view of Stokes. W formation forming. And up week. No new weekly lower low. Up 3.33% on the dot. Pretty good. Volume, not so good. Daily chart. We recaptured support. This doesn't scream to me higher lows at all. Volume light. So, going through the charts we've gone through already, tomorrow is going to be a critical factor. Do we rally tomorrow? If we rally tomorrow, do we close at the highs of the day? Do we close above support levels? Because that's going to matter, especially on the Dow at the 30,500 mark. If we fade tomorrow, I believe that in all probability, what's going to happen next week is a pullback, creating a W formation, right? Here's the left side of your W. Here would be the pivot point. Then would create your right side of your W, assuming that you hold the prior lows and then you jack up higher and you complete your W formation. We don't have that yet. We're not there yet. So I'm skeptical of this brief rally that we're having here. I would like to see a W formation form, a pullback higher low, and then a confirmation move up higher. That would have me more comfortable with saying, okay, we're going to definitely rally here. We're going, especially if we're on a weekly time frame. We're nowhere near that yet. But on a daily chart, we're close. Qs. Now, I've been pounding the table that I am not going to be a buyer of the Qs, although I did buy some Qs last night. I sold them this morning. We made a profit. Until we hit 265 to 260. That was my price target. It remains my price target. I am not going to be happy until we get down here on the Qs. But short term, we have to trade the market that was given to us. We can't force the market. If we try to force the market, well, we lose money. So it looks as though right now we are slightly above this upper band of resistance in blue. That would be a breakout. Volume, not so great. Indicators looking good. MACD very long in the tooth. I can easily see a rally here in the coming week and weeks. Daily chart. We've recaptured support. And what's going to drive any rally, folks, is if the markets sniff out that the Federal Reserve is taking 3/4 of a basis point off the table, if they continue to see the Fed's balance sheet rise, despite what the Federal Reserve committed to, what they're doing is inflationary. So you buy you buy property, you buy goods, you buy stocks because they're inflating them. So the reason why equities are down is because they're deflating the value of currencies by raising rates. So if that stops and you artificially raise or put more money into the system, well, equities go up higher. So Q's looking good here. No higher low yet. Volume light. Let's keep that in perspective. Volume very light today. The banks, I like the banks here. No new weekly lower low. They like rising yields. MACD histogram very long in the tooth. Daily chart. Now the Qs broke out here on the 21st. Retest 1 on the 22nd. Retest 2 today. The banks are a buy. And this is what I mean by putting in a higher low. Now, if we break out and above 3160 on the XLF, game on to the long side for the banks. Technology. Up over 3.5% on the week. All the indicators are oversold. Volume horrible. Even for an abbreviated week, volume horrible. Daily chart. Bullish reversal bar today. No higher low yet. volume light, very, very light. Semis, still not looking wonderful. I mean, they're up on the week, but they stopped at resistance at 215 per share. Very light volume. Last I looked, NVIDIA was down on the day. Look, the semis were down today. NVIDIA is on our watch list. I would love to get me some NVIDIA on a rally, but it's weak. It's weak. Stokes are rising. All right. So everybody's favorite today, LABU. We own LABU. Rocket ship today. This is a leveraged ETF for those that are risk adverse. This is not for you. This is a trading vehicle, not an investment vehicle. We were up today. Oh my God. We're up on the week. We're up on the week on this about 41%. And we've been talking about LABU because I mentioned a few weeks ago, we got to keep an eye on these Stokes. They flirted with a breakout back here in April, rejected, but ultimately back here in May, they broke out. I said, this is significant. We have Stokes, which is a momentum indicator, a forward-looking indicator, breaking out. And this was happening while they were getting destroyed. The LABU was getting destroyed. Now we are putting in a higher low. LABU, we like. Daily chart. Could we close above 8 tomorrow? Sure. But yeah, the 50-day moving average immediately above, it's going to be difficult. Massive, massive volume. This is what you want to see. Energy. This goes back to what I was talking about. This is deflationary, meaning it's not, I shouldn't say deflationary. I retract that. It's disinflationary, meaning the rate of inflation is going to slow a little bit. And we've seen that. Despite last month's CPI numbers, at the core, it continued to trend lower. So when you take a look at oil on the week, down nearly 3.5%. Nat gas down for the third consecutive week. It is down over 0.5%. Oh, this is gasoline. Sorry, gasoline. Thought I had UNG up here. Nope. The Bloomberg Commodity Index, it's dropping like a rock. Down nearly 5.5%. We've talked about wheat quite a bit. Wheat down 3.5% on the week alone. This is a broken chart. So this is what I mean about the gold stocks. Why did gold go lower? Well, it was fear that the Federal Reserve was going to raise rates aggressively. Therefore, the dollar climbed. Gold is priced in US dollars. So you would expect, okay, a little bit of a headwind on gold because of the Ukrainian issue causing a bid under the dollar. The EU's a catastrophe with their inflation because of energy. That causes the euro to get sold off, money coming over from Europe and into the United States, seeking US dollars. There's a shortage of dollars. Okay, I get it. But what happens when that geopolitical risk comes off the table? What happens when the ECB, which they hinted at their last meeting last week or the week before, is poised to raise rates? Sayonara dollar. Speaking of gold, weekly chart, we are at the lower band of I'll call it a rising uptrend channel. I'm not liking the price action here. I haven't liked the price action on gold for several weeks now. And that includes the miners. When I take a look at the monthly chart and I see whether or not our thesis for being levered to gold and the gold mining stocks is still intact, confidence is somewhat shaken. And I'll tell you why. This line chart here, which we traded below this time last month, but we managed to rally back to close above it, is now back down below support. Stokes are rolling over, putting in a lower high. I'm not liking it. We had better see a big fat rally in short order, or gold is in some trouble. Daily chart. Down day today. How's volume? Volume's light. As for the mining stocks, they caught it on the chin today. Initially on the news, the PMI news, gold did the right thing. It did what I expected it to do. It rallied. Gold mining stocks rallied this morning. You wouldn't know it by the end of business today, but they took it on the chin. So I would not be a buyer of these names right now. I would say hold off, wait for a setup to occur here before you got long. We are at support on the GDXJ. Those are the junior miners. Let's go to a daily chart. Horrible, horrible breakdown here. We broke down below the May, June lows. Do not go buying these names right now. All right, let's do some chart requests, and we shall say goodnight. Okay. Walmart, first up. Walmart. Oh, let me go to comments here. Talon, savage. When good men sit on their hands and allow tyranny, the bastards will win. Awesome comment. Awesome. Love that. That's a tattoo. That's a t-shirt. Bob, I was at the barbecue. How is volume in general this week? Very light. Very, very light, Talon. Yeah, I'm liking the banks. I want to see how they close on the week, but I'm liking the banks. They're cheap. I was with my father on Father's Day, and we were talking about the banks, and he was telling me about Citigroup. Not that I like that bank in particular. He's a big Morgan Stanley guy himself, but we're talking about the banks, and I think Citibank is sporting a 5 PE. That's bananas. That's nuts. So the banks look pretty cheap here relative to the rest of the equity market. With yields still moving up higher, that's good for the banks. So if the S&P 500 can stabilize, that allows the banks to capitalize on rising yields. They're going to raise interest rate. They're going to credit card interest rates. I had a brain fart there. Family friendly show. Sorry about that. Hey, all Talon. Looks like I watched this later since I was late. Okay. I'm glad you're here. Let's see what we've got in the members area. Ticker cloud. UNH 4, Larry. UNH. I don't have much time today. I got to log off. So we'll do UNH and Walmart. All right, let's do it. Hate that. Okay, try it again. All right. I like E. Where are my Bollinger Bands? I like it a lot. I like it quite a bit, as they say. Very nice. What we see here is a nice pullback. Looks as though we're getting ready to break out in a monthly time frame, weekly chart. Monster breakout on the week. Here's that monthly resistance level, but on weekly time frame. The play here, I think, is that if we close above resistance this week, let's wait for a retest next week. Folks, if you're not using TrendSpider, 35% discount code below. If you're not using them, you're exerting way too much energy on doing technical analysis, and you're fighting a war. And you are at war if you're a trader with one hand tied behind your back. So get TrendSpider, 35% discount code below, and get another arrow in your quiver to bite these bastards. Daily chart looking good. Larry, I like the setup here quite a bit. Monthly chart looking good. Weekly chart, I think, is a setup where you pull back. I have it highlighted here on the daily chart. You pull back and get a retest. You buy that support level and use a tight stop right below. I don't think there's going to be any need for that tight stop because we're probably going up higher. I like it. Here's your upper band of resistance. I did not draw this line for those folks that are new. Here you go. Automated technical analysis. That's an algorithm. So if I do buy this stock, which I may, I want to know where to get out. Touch, bounce. So, and we'll set this up for a few times because it doesn't mean we're going to sell everything in one shot. May just scale out. Good. We're good to go here. UNH, bullish. I haven't been saying that much lately. Yes, Franklin, please hit the like button. Franklin demands you hit the like button. You can't. Franklin's a gentleman. Don't refuse him. Please smash the like button. What else we have? Walmart. WMT. Last time we spoke about this one, we were looking for a W formation on it. I think it was this time last week. Weekly chart. We got it. Support held. Here's your pivot point up here. I think this is a buy. I think you can buy Walmart. Opening position, buy more on a close above 129.86 daily chart. Note the Bollinger Bands getting very, very tight. I like it. Walmart looking good. I think we have a short-term bottom there. Folks, thank you for being here. Don't forget my 5-part video tutorial, free below. Enter your email address, no spam. TrendSpider, 35% discount code. The Contrarian Trader, my company, 14-day free trial offer. Silver Gold level members, you get TrendSpider for free. Have a profitable trading day and an awesome weekend. Thank you for being here. My honor. And have a great night and be well.